Okay, we're going to kick off.
Go ahead, Claire. Yep.
Great. Okay, so good evening, everybody. My name is Claire Hanrahan. I'm the Managing Director here at Irish Pensions and Finance. You're all very welcome to the first webinar of our spring series. And this evening, we are going to talk to you about getting mortgage ready. So I want to firstly say thank you very much, Sarah Connolly, for organising it, our marketing manager, and you've also produced this evening. I'm also joined by Ross Gaynor. He's our mortgage manager, and he's going to give a little bit of background about himself in a moment. We also have Shauna Hickey on the call, and she's our mortgage advisor. So before I hand you over to Ross and Shauna, I just want to go through a few bits of housekeeping. We estimate it's going to take about 40 minutes for the presentation. We've had a lot of the attendees sending in questions, which we love. We always love questions. We're going to cover a lot of them when we go through the particular slides. What we will do is we will open the chat function at the end of the presentation for a few Q&A. But look, don't be distraught if we don't get to your question, particularly this evening. Tomorrow evening, or tomorrow, Sarah, we're going to send out an email to everybody that's on the call this evening with the PowerPoint, a video of the actual presentation, and then an opportunity to book in a phone call with Shauna or Ross. Yeah,
exactly. So we'll have a little form that you can fill out if you'd like to book in with Shauna or Ross. Just pop in your details and we'll receive that automatically, and we'll make sure and get you booked in.
Brilliant. A few other bits and pieces. Okay, so we want to make sure everybody's on their toes and that they're listening to everything that we tell them. So we are going to have a draw at the end of the webinar for €100, one for all voucher. We'll put a question up on the chat function, and the first person to get it right will win the €100. So fastest finger first. And that's the kind of housekeeping. I suppose from my point of view, we normally do retirement webinars, investment webinars. So this is the first time we've done this. As a lot of the people on the call know, Irish Pensions and Finance, we're in business 30 years this year, really proud of it. We've 25,000 existing clients, nearly 30,000 policies. But I suppose a lot of our clients really know us for pensions, AVCs, life assurance, protection, investments, etc. And I suppose, why are we now, working with our clients and providing a pension or a mortgage service? I suppose over the last number of years, a lot of our clients were coming to us going, can you help me with my mortgage? And we weren't doing it. So I suppose we launched IPF Mortgages last year. It's been going very, very well, and really enjoying helping the clients on that really special journey. So we said we'd put on this evening as a point to give everybody a hand with some very general information, and then with the view to them having a more in-depth look themselves at their own situations. So without further ado, and I suppose, look, what I'm going to do is we're going to be going through different slides. I'm going to be asking questions as if I was sitting in the audience. So without further ado, I'm going to hand you over to Ross Gaynor, our mortgage manager.
Thanks, Claire. I'm Ross, and I'm a fully qualified financial advisor and a professional banker with over 6 years in retail banking. Before that, I was a professional footballer for over 12 years across England and Ireland.
Hi everyone, I'm Shauna Hickey. I'm a fully qualified financial advisor also. I'm a mortgage broker here at Irish Pensions and Finance. I'm with IPF for about 2 years now, and I have about 8 years experience in the financial sector.
Okay guys, look, we'll get started.
In very good hands. That's what we're,
Hopefully. Okay guys, look, we'll get started, and we'll start off with a question. So please put your answer in the chat box, okay? In 2018, what was the average mortgage rate? Okay, so the correct answer is 3.21%.
So we had a few.
Yeah, our best rate offering at the moment is 3.15% with cashback. So all the talk on rate increases at the moment, that rate is still attractive. So it's actually pretty good. We're still attractive in the market at the moment. Okay. At IPF, we specialize in giving you the best mortgage advice on the market. Our partners are Permanent TSB, Haven, which is part of the AIB group, ICS, and Finance Ireland. Today, we'll go through why choosing a broker, mortgage types, income and additional income, documents required, rules and fees, your mortgage journey, and most importantly, our favorite, the do's and the big don'ts. Why choose a broker? There's 4 main reasons why you should choose a broker, and particularly IPF. They are access, market, personal touch, and for life. We have access to different lenders, which retail banks do not. We compare the market, ensuring you get the best rates available with the best cashback offers. The personal touch is key here, as you have a direct link with your financial advisor on mobile or email. In banking, you'll have to go through their call center, which can be extremely frustrating. We all know. For life, potential switchers down the line, if you're deciding to trade up, and also we are specialists in life cover, savings and investments, and pensions. It's really a no-brainer to choose a broker over a retail bank.
Yeah, and I think, Ross, like I remember back to the first time, like we bought our family home, and you know, it's a really emotional journey. So one thing, you don't want to be as stressed doing it. So at least, you know, Ross, Shauna, you're at the end of a phone call or an email. Like you say, you're not going to a call center, wait and, you know, press 1 for this and 2 for that. And as well as that, like, and like the same as the other side of the house in IPF, we work for the client. We don't work for one bank. I mean, that's really, really important.
There's so many ups and downs throughout the process. And look, it's great having that someone available and someone to rely on. Look, it really does make the difference choosing a broker. You have that person there, and any questions, it's answered straight away with the broker.
Brilliant. Okay.
Okay. So look, first time buyers, it's such a scary market at the moment, but hopefully this will give you the tools to tackle it head on. And even if you are thinking of applying in 6 months' time, now is the time to speak with me or Shauna. Central Bank have now increased the limits on how much you can actually apply for. It's actually now 4 times your combined gross salary. So if you're on 50k per annum and your partner is on 35k per annum, you can actually apply for 85 times 4, which is 340k. I'll touch on the additional income on a later slide, but we can also include that once it's evident.
Can I ask, that just changed recently, Ross?
That just changed in January, Claire, yeah.
Right, okay, great.
Yeah. So last year, if you were a second-time buyer, you actually needed 20% deposit. I'll touch that on the next slide as well. Now you only need 10%.
Okay.
As a first-time buyer, you need 10% required. That means if you find a property for 300 grand, you'll need a deposit of 30 grand up front. This can be through your own savings. There's also gift elements too, and the Help to Buy. Once you have saved a minimum of 5% of the deposit yourself. As I mentioned, there is schemes available, as the Help to Buy can give you up to 30,000. There's a massive incentive on the market at the moment, and that is cashback. You can actually get 2% cashback on the loan amount and also 2% on the monthly repayments. This means if you have a mortgage for 300,000, you'll actually receive 6,000 within 40 days of drawdown, and also 2% on the monthly repayments. So if you have a monthly repayment of €1,000 per month, you'll actually get €20 cashback each month, which will help pay for your mortgage protection or your home insurance.
Yeah, that's a good way of looking at it.
Yeah.
Ross, I have a few questions here from some of the attendees. Can I ask?
Yeah, go ahead.
Great. Okay, so we had Aisling messaged in. So she's potentially going to be getting a lend or gift of her deposit. So is there any rules around that or anything she should be careful about?
For first-time buyers, they're allowed completely. You must show at least 5% savings on your own of the purchase price. So if the purchase price is 300 grand, say, Claire, you will have to save a deposit of 15,000 yourself, and the rest or more can actually be made up of a gift.
So it can't be all from Bank of Ireland.
First-time buyers can't. No, you have to come up with at least 5% yourself.
Okay, that's very good to know. The next question we had in was from Jennifer. So she's 39 and she was wondering, like, what's the maximum term she can get a mortgage for?
The max term Jennifer could get if she's 39 would be 31 years. So the average mortgage can run for 35 years and it can run up to the age of 70. Now that's once you're
Okay.
paying into a pension.
Right. Okay. Very good. That's really interesting.
Yeah.
Okay. Great. As I said, we've had a lot of questions from first-time buyers. So what we'll do is we'll maybe move on and then we'll open up the chat at the end and see if we can cover a few more.
Perfect. So, second time buyers, you can only borrow 3.5 times your combined gross salary. But as mentioned before, since January, you now only need 10% deposit, as this was 20%, which was massive. If you were looking to buy a house for 400,000, you nearly need 80 grand as a deposit, which is huge. So again, look, you have two very good options here. If you're thinking of trading up, you could potentially keep your existing house as a buy-to-let, as a rental property. I'll go back in a little bit more detail on that. The other option is to sell your existing property, which will help with your deposit. Cashback is the same for second-time buyers as in the previous example. You get 2% on the full loan amount and 2% on the monthly repayment.
Okay. Yeah, because John had messaged actually to ask, like he would like to keep his current house. So is it impossible, or
It's not. It really isn't now that you only need 10% deposits. So it's really based on affordability. You can keep your existing house as a buy-to-let. You'll still need your 10% deposit, but you'll also have to set aside 6 months mortgage repayments in case the property isn't let out straight away. That's the only difference.
Okay, so that's something to be aware of. Very
Yeah,
good.
it really is.
Somebody had a question about exceptions. So what does that mean?
Yeah, so exceptions, we don't control these. The lenders will let us know when they are available, but typically you can borrow 4.5 times your income, but you must meet certain criteria.
Any examples, I suppose, or?
Suppose if you have a first time buyer where you're borrowing 4 times, you could then borrow 4.5 times. It gives people a bit of a better option, but at the moment they're a little bit off the table. So it depends when the lenders will let us know when they are available.
Okay, but that's something I suppose yourself and Ross will talk to people about, and give them a steer as to we could get an exception. We'll ask,
Exactly, case by case. Yeah.
Great. Okay.
So I wasn't really going to talk about self-builds today, but we did have a few questions on self-builds. So I put a couple of slides together on this one. Okay. So look, if your site is owned or gifted, you can actually borrow the lower amount of 100% cost of build or 80% market value on completion. If the site is actually part of the application, the first stage payment can be up to 80% of the site cost and 100% of the construction, or 80% of the value in repair, meaning the market value once it's completed. Typically, a self-build mortgage is paid out in 5 or 6 stage payments. If the site isn't owned already, the first stage payment is typically purchasing the site. As I mentioned, it's 80% of the site value. The second stage is to clear the site, prep it, and lay down your foundations. The third stage is for the walls and the timber frames. Okay, it'll start to look like a house by this. Stage 4, you'll get your roof, your windows, and doors to be placed. First fix is your next stage. That's typically plastering, floors, ceilings, walls, electrical cables, and pipes for your water supply. Second fix will be sinks, baths, light fittings, etc., that sort of stuff. The final stage payment cannot be released until the house is livable. Okay, a final valuation will be done before the final stage payment, and the valuer will have to confirm whether the property is livable. If it is, the bank will release the final stage payment. Each stage payment, your engineer will complete a certificate, a stage payment form. This will be sent to the lender, and they'll actually release the funds to your solicitor's account.
It sounds very involved, Rob.
There's a lot in it. There is a lot in it. But again, look, I can chat. If someone is looking to build, I have a lot more detail on it. I can kind of go through that in the one-to-one with after this, if that's okay. There is a lot in it. But again, the difference between going to a retail bank and going to a broker, you'll have that person on the phone throughout the whole process. And I'm going to keep reverting back to that. This is the personal touch that you don't have in banking. You have that personal touch when you deal with a broker.
Very good.
Some of the top tips, okay, so some of the costs can include landscape and driveways, curbing, Haven is another one that we actually deal with. They actually include fees as part of the cost as well. Some of the things that I would definitely recommend having in order is your planning permission, costings, and your certificate of inspection. This is all done by the engineer and the architect.
Right, okay.
Yeah. A big thing is obviously with inflation and the price of timber and everything else, lenders will now look for at least 10% of a fund or a pot saved just for cost overruns. Because again, you don't want to be coming back and asking for more money at the end.
Yeah, do you watch Room to Improve? When they had like COVID, all the prices went up when they went back to building.
Yeah, crazy like.
Yeah.
So the lender will actually release each stage payment. So you will get the funds for each stage payment, meaning you're only going to be paying back for the funds that you have received. The monthly repayments will actually increase as the next stage payment comes in. So you're not going to be paying the full loan amount until all stages are actually drawn down. My main tip here is to get approved for more than you think you'll need. You don't need to request all the funds at the end, okay? I can't stress enough, you don't want to be going through a cost overruns application or a top up. They can be lengthy and they can actually be more expensive. So definitely, if you are thinking of building, factor in at least 10 to 15% for cost overruns.
So that's really good advice. Yeah, great.
Yeah.
Great.
And again, there's a lot more information on self builds, and look, I'm happy to discuss throughout the next appointment anyway.
Perfect.
This is the hot topic, okay? Because every 1 in 2 people I speak to, it's about switching. Should I switch? Should I not? With the ECB rate going up to 3%.
Yeah.
Why should you switch? Lower interest rates, okay? Any rate typically above 3.15 or 3.25 is worth exploring your options, as we can actually get you lower rates, but there's added incentives into that. If you've done home improvements, okay, BER ratings, extensions, anything over the last couple of years, okay, we can actually amalgamate that into the switch. For instance, you might have a mortgage repayment of €1,000 per month, and you have another loan repayment of €500 per month. By amalgamating these loans in the switch, you could actually potentially save $200 to $300 per month, which would be very nice.
Yeah, definitely.
100%. Again, look, if you're thinking of building an extension or improving your BER rating or anything, you can actually release equity, as my example shows below. You can borrow extra funds in the switch. Typically, any home improvement loan, credit union or wherever, is around the 8% mark. But instead of borrowing...
It's really dear, like, yeah.
Yeah, instead of switching your mortgage for 300 grand at 3.15 and then borrowing 100 grand at 8%, depending on your equity, you can potentially switch for 400 at 3.15 for the same term. And look, that will save you hundreds per month. I have clients that are thanking us for doing that because they didn't even know we could actually do that. We couldn't. Another big reason to switch, you might be a little bit better off now, okay? By reducing the term, which will obviously increase your monthly repayment, but decreasing the term will allow you to clear the loan faster, paying less interest and potentially saving you thousands over the course of your mortgage. Cashback is available for all switchers too. So again, 2% on the monthly repayment and 2% on the full loan amount, including the equity release on top of it. So if you borrow 300 grand, as mentioned before, 6 grand within 40 days and 2% cashback on the monthly repayment.
Really good. I'm just thinking of, our pension clients, a lot of them, the big questions when they go think about when they can retire is the mortgage done and are the kids educated? So by reducing your term, you're definitely giving yourself more of an opportunity to retire early. I had a couple of questions in, guys. So look, we always hear about trackers. Don't ever let go of your tracker, Is there a time when I should switch or consider switching my tracker?
I knew it was coming, Claire. So, stick or twist? That's the question. Every single switcher that has a tracker or every tracker person I'm chatting to is the same thing. Do I stick? Do I twist? If your tracker is less than 1% above the ECB rate, it still might be worth, and it still might make sense switching across. Markets are predicting ECB rate will go up to around the 4% in 2023. This would actually push the cheapest tracker to 4.5% and most to an average of 5.15%.
That's so much.
I can't stress enough though, fixing your tracker is a big decision. Once you fix, there's no going back to the tracker
Right.
rate. But it's definitely worth exploring it for sure. Because again, if you fix for 5-7 years, you have that sense of security. You know exactly what your repayment's going to be for the next 5 to 7 years.
Yeah. So I think, is it a thing that, look, definitely have a conversation about it?
It's 100% worth the conversation, Claire. Like, even if it's peace of mind to kind of say, no, you're okay, stick with what you have. Or look, that could potentially go to this. We could actually do this. And then it might open up another conversation where you might have other loans, or you might want to reduce the term, or it's definitely worth exploring, because there's so many options for anybody on a tracker at the moment.
Okay, brilliant. We had another question in, somebody, now this is a person who's on a fixed rate. They have 3 years left on their fixed rate. So they were wondering, if they were to switch, like, how early can they do it?
Okay, so you have to stay with your current lender for 12 months. So that's at least.
So when you switch initially,
you have to stay with them for the full year. So the full calendar year. So if you're in a 3-year fixed term, and say you're only a year and a half in there, you can switch, you can change, but it can come with a breakage fee. So you'll have to contact your current lender, ask them what the breakage fee is. Now, it might not be too high. And again, it can be worth it if the interest rate is lower. So the options are there. You can switch when you're in a fixed rate, but you have to explore your options, and we can have a look at that.
and you can be weighing everything up, going like, this is a switch fee, and this is,
And you can be clever about it as well, guys, because like, new business rates are a lot more attractive than existing business rate with your lender. If you even look on their website what their existing business, once your fixed rate is finished, you automatically are given existing business rates or a variable rate. That can be significantly higher than a new business rate in another lender. Do you know what I mean? So with cashback as well, like, it's definitely a switcher's market, and it has been for the last couple of years.
Great. And I think it's just, the way a lot of people are just afraid of, oh my God, all the paperwork and everything. So I think that's where, it comes in. A good broker will make the journey very easy, and,
Yeah. So look, we'll go into the income piece here. So look, you're PAYE and you're self-employed. Okay, so we'll go through all this. We've an amazing online system, which is an online mortgage portal, and all of this is on it as well. PAYE needs to be past probation, okay, and must have at least 1 year's continuous employment. 2 of your most recent pay slips, your EDS, which is your OP60 for 2022, and a stamped salary set from your employer. Okay, self-employed income is a little bit more difficult, and we might have many on the Zoom here. But if there is, we can actually link directly in with your accountant to take away some of the work where other people wouldn't do that for you. You would need 3 years financial accounts, your Chapter 4s and your Form 11s for the last 3 years, and also a letter confirming your tax affairs are in order.
Great. Okay.
Yeah. It's good to know, because a lot of people would think, oh, I'm self-employed, I'll need all this. But look, like, we're here to use your accountant as well. We can link. I have clients that I speak
that's brilliant. Yeah.
directly with the accountant, and it's taken a lot of the heavy lifting off the client. So that it's definitely a good option. So look, additional income, like, this is massive, because we can actually take additional income like overtime, bonuses, on call, to a max of 50%, and it must be evident in the previous year. So an example would be if you earn 50K basic and 50K on call, okay? We can actually take the full 50 and then 50% of the 50K on call, which would total your income at 75K for the year. If it clearly shows over the last 3 years that, look, we might be able to take the full 100% additional income, but it's case by case with the lender, okay? If it's a strong case, they will definitely look at taking 100% on it.
Right. If you have a very good track record of this.
Exactly. Like if you work in radiology, or if you work somewhere where you're guaranteed on call for the last 3 years, like, a lender's going to want to give you that money. They're not going to put their nose up. They're going to want to give you that money. Okay. So if it's a good case, we'll put a recommendation together. Worst case scenario, they come back and say, we can only take 50%.
Right. Okay. But I think, that income is so important to, guards or HSE workers.
Yeah,
so
it really does.
Get a mortgage to reflect those earnings.
Yeah, it really does. And we can actually take 100% shift allowance, which a lot of the healthcare people have. And also we can take 100% car allowance as long as it's evident on your pay slip and your salary cert.
Yeah, a lot of the council workers, I think, like Dublin City Council and stuff, will have a car allowance. So very
Exactly.
good.
Yeah.
Great to know.
Now,
Okay.
Sean is going to talk you through the next steps, the documents, etc. And yeah, go ahead, Sean.
Perfect. So I'm going to have a little look at documents. So these documents are going to be required for all applications. So whether you're a first-time buyer, second-time buyer, or a switcher. So the first thing we need are your 6 months current account statements. So your last 6 months. And to bear in mind, we do look for your revenue statements. You can't trip people up. Or your N26. We're looking for the revenue. We need 6 months of your savings account statements. So if you are saving €1,000 a month, we need to see the account statement of where you're putting that €1,000. We need 12-month loan statements. So if you are switching, we need your mortgage statement for the last year. 6-month credit card statements, if applicable, if you have one. We need your salary cert. So this is a form, as Ross mentioned earlier, that we provide you. You send this over to your employer. It's signed, stamped and dated, and it has all your employment details. We then send that over to the lender. We need 2 of your most recent payslips. And last but not least, we need your employment detail summary. This was formerly known as your P60, and you'd get this on the Revenue Online system.
Great. So I suppose, you know, when we'll be sending that list of things to people, Shauna.
Yes, all online on our online mortgage portal. You'll get a link, it's sent straight to your email, and you upload all these documents very clearly, and it's very easy to use. Gives you good guidance as well. So
Great.
Throughout the process, you're going to hear these terms, and they can be confusing. So I'm going to explain a little bit of detail.
This is like the Dummy's Guide to Mortgage Terminology.
So LTV, this means loan to value. So this is the max amount you can borrow based on the value of the property. So we touched on it earlier. First-time buyers and second-time buyers, you can borrow 90% of the value of the home. LTI, this stands for loan to income. This is the max amount you can borrow based on the income you earn. So again, first-time buyers, 4 times your income, or it's your combined income, it's 4 times. Second-time buyers, it's 3.5 times.
Right.
Next, we have NDI. This stands for net disposable income. This basically means your salary that's coming in minus all your outgoings. So your bills, your direct debits, it's basically what's left over when everything else is gone. Term, another word for years. So it's the amount of years your mortgage is for. As I said earlier, the max amount of mortgage can be is 35 years. Again, we can look at your options if you're interested in 25, 20, whatever it may be. Fixed or variable, another hot topic. So the difference is a variable mortgage means that each month your repayment will fluctuate. It can be a little bit higher as well. On a fixed rate, it means, so for an example, if you're on a 4-year fixed rate, every month for those 4 years, you'll pay the exact same amount. Gives people a good option. The next we have is continuous employment. So for anyone non-EU, you must be in continuous employment for at least a year. And last but not least, me and Ross's favourite, it's the PRA. This is your proven repayment ability. So we must see you have 100% proven repayment ability. So we'll factor in if you're paying rent, we'll look at your savings, and we must see 100% of the repayment ability.
Guys, this is so important, and there's a massive reason why this is in the center. Okay, we need to be able to see your rent payments, and they have to be set up through standing order. Okay, they can't be paid in cash because you can give somebody cash and get it back. Okay, savings needs to be clear and regular. Okay, we have so many applications that are failing on PRA. So this is the most important part of the slide, is the PRA factor of it. Okay.
I think as well, Ross, you know, like when the person gets a mortgage, they want to be able to, you know, manage it and have a life, and, you know.
Yeah, exactly. That's what we're looking for. We want to be able to see that you can repay the new mortgage amount over the last 6 months. And if your rent is 1,200, or if you're lucky to have it at 1,200, and your new mortgage repayment is 1,200, you have 100%. So we're not even going to look at your savings. Okay. But if you're living at home, if you're living in family or wherever, and you're not paying rent, it's so important to have that 1,200 saved each month and not touched. So important.
Can I ask a question then, I suppose, and maybe you will cover this? Like, say if somebody's living at home, but they're like giving keep to their parents, you know, what way can they, if they do a trail of money, like, or
No, we can't take that either. It has to be rent and it has to be through a standing order and it can't be paid to your mum or your dad. It has to
Okay.
be rent. So if you're living at home, you should be able to save 100% of the mortgage repayment. Okay. There is also other factors of the PRA. So if you have been paying a car loan or a loan, okay, and it's going to finish in the next couple of months, we
Yeah.
can actually use that loan repayment as PRA. So if you have a €500 loan each month for the credit union and there's only 1,500 left and it's going to be finished in 3 months, we can actually take that 500. Once it's been paid over the last 6 months, we can take that full 500 towards your PRA to get to that magic 100% mark.
Brilliant. Okay. Great. Okay. Thanks.
Okay, so we're going to have a little look at the fees involved. So these are really important to factor in, especially when you're paying your deposit. We do need to have funds left over for these fees. So first is our broker fee. This is the application fee of €295. The next is your valuation fee. This is for all applications, whether you're a first-time buyer, switcher, you're buying a new house, you're buying an old house. We need a valuation done. The bank will request this, and this is €150. Next is your legal fees. This is your solicitor. The solicitor is so important. It's such an important part of your mortgage process. Typically, the fees are between €1,200 to about €2,000. Stamp duty. This is payable on first-time buyers and second-time buyers. It's 1% of the property value. So we'll take the example, if you have a property worth 300,000, you will pay €3,000 stamp duty. This is paid to your solicitor, who then pays revenue. And last is your other costs. So obviously, to get your mortgage, you're going to need mortgage protection and you're going to need home insurance. So we need to factor these costs in.
Guys, just on the legal fees, okay, you wouldn't believe some of the quotes that we've heard for a solicitor, okay? So
Really?
this can really, not honestly, Claire, this has differed so much, especially, like, it's just mad. We've had quotes of €4,000 from a solicitor, and we've quotes $1,200 for the same case. And that person for $1,200 will do exactly the same amount of work than that person charging $4,000. So look, it's all about saving money here, guys. Like, it really is. You don't want to be spending too much on it. And shopping around here, you could potentially save so much on it. So shop around for your solicitor. Good one is use your family, use your friends.
And a recommendation.
Do you know what I mean? Recommendations go a long way as well.
Okay. Yeah, like you say, it's not just kind of the cheapest is best.
No.
You do want to make sure that they're reliable, they get back to you.
Exactly. Yeah. And look, an example there on the mortgage protection, because people don't factor that in, and the home insurance. I've actually based a couple of quotes on the amount that we've been kind of mentioning, at 300,000 over 35 years. Mortgage protection would come in at €33 per month, okay? And the house insurance would come in at around €24 per month, both coming from Zurich. So just factor that in, and they are the cheapest there on the market for that amount, okay? So with the cashback element that Permanent TSB are offering on the monthly repayment, like, if you're getting, like, say, $1,200 monthly repayment, you're getting €24 back each month, which could pay for the house insurance. And again, it's about saving cents here.
Yeah. I think just another thing, obviously, with regards to the mortgage protection, that's more expensive if you smoke or vape. Just be careful about that. And as well as that, look, what I would say is, when you're starting this journey, if you have any underlying health issues, do let the mortgage team know, because the mortgage protection is underwritten, and if there's anything in the background between, that can take it a little bit longer. So just let the guys know if there's anything there, because we don't want to have everything ready to go and then suddenly we've got, a lot of health questions and stuff to deal with. So.
And you're not guaranteed to get covered as well, guys. So it is, we can't stress the point enough. Be open with us at the start. If you do need to look at the mortgage protection early in the process, like, a process can take 6 months. And if you get to the last stage, which is the mortgage protection side, and you can't get cover, you're after wasting 6 months, and it's not a good situation to be in.
Yeah.
Okay, I'm going to look at a typical mortgage journey in a little bit of detail. So we'll start with your application. This will move then to approval, which is your approval in principle. We'll then move to the valuation stage, as I touched on earlier. Then we move to loan offer / contract stage, and our favorite stage, the completion stage. It's a lovely place to be. Myself and Ross, we're going to have a little look at the steps in the mortgage journey in a little bit more detail now. So obviously, you book your appointment with Ross or myself. We have a look at all your details, your income, your outgoings, and we gather a plan and we see what's the best option for you. We then create an application while you gather your documents on our online mortgage portal. As I said earlier, it's very user-friendly. You upload all your documents and we review them there. We then send that application along with your documents over to the lender of your choice, and we then will get back your approval in principle. This is a document that's valid for 6 months, and it basically lets you go and shop for your house. Just to bear in mind, guys, a lot of estate agents are not letting you look at houses even without your approval. So if you are thinking of looking, definitely get your approval in principle. It is tripping people up at the moment.
Okay, right, didn't know
Very
that.
important.
Yeah.
Then we get to the lovely stage where you find your home, and then it gets very exciting. Then we get your property valuation complete. That's, as I said earlier, €150. In the meantime, then you're shopping the market and you're having a look for the best solicitor.
Then you'll get to your letter of approval stage, which is your contract. It's your loan offer. This is after a property review, and we'll issue the loan offer to your solicitor. This locks in your rate, okay? If there is another rate increase, the lender will give you a deadline, typically 6 weeks to 2 months out, in order to complete the sale or complete the purchase. After that, a new loan offer will be needed and you'll be subject to the rate change, okay? You'll have you'll have enough information way before you come to that deadline. Home insurance and life insurance, okay, so I touched on quotes there for you. Very important, we'll pick this up anyway, but the home insurance needs to match the rebuild value as per valuation. And I guarantee you, if you have friends and family and you say, oh, what are you covered for? Oh, I'm covered for 200,000, but the house would actually cost 300,000 to rebuild. The insurance company will only give you the 200,000 to build a house. They won't give you what it's actually valued at. Okay, so it's very important to actually make sure it matches the rebuild value. The life insurance needs to run the length of the new mortgage. And luckily, look, we specialize in this, so we actually have you covered here. Exchanging of the contracts. When you finally agree on an offer for the house, contracts will be signed, and once you and your solicitor are happy with all the legal documentation, the lender will then check to make sure there's no documents outstanding. And look, as Shauna mentioned, completion is the best time. Your solicitor will actually arrange a drawdown date, request the funds, and your solicitor will then arrange the perfect time for you to pick up the keys to your new home.
Brilliant. I suppose a question, right? And what I've seen with you guys is really good, is you're very good at managing the client's expectations, because from the start, from the appointment to the picking up of the keys, like what can people expect the journey? How long will it take?
Typically, so if you do have your house in mind, or you're purchasing it off family, that can take about 3 months from start to finish. If you don't have your house and you're looking around and you're house hunting and you're going through the process, it can take anything from 6 months onwards. So it's just managing that and just making sure you're at the right stage for you. So you need your approval if you're house hunting. That's so important. And that gives you the idea then how much you can borrow and what houses you can afford.
So that's for first-time buyer, second-time buyer. Obviously, we spoke the self-build is a totally different kettle of fish.
Yeah, why would you ever self-build? That's a question. Why would you ever self-build? It's the most stressful time ever. It's just, but look, it is very, very favorable. Look, there is good deals there as well, and we're here for the whole journey as well. So that does take a little bit longer. But again, getting the first stage payment typically takes around 3 months. It's exactly the same as if you were a first-time buyer with a house. Typically, it would take. We have to go through the same process with a property review and evaluation done as well. So typically around the same.
And any of the attendees that are thinking of switching?
Yeah, I'll go through all of that in there's a massive book about that size on self-builds, and we can go through all of that together when you're thinking of applying, or if you are thinking of switching, look, like new builds as well, look, we'll take switches as well. It's quite easy to do the switch. It's very easy.
Yeah. Okay, great.
Yeah.
Be mortgage ready. My favorite slide. The do's,
Ross is going to put manners on all of us now.
the do's and the really please do nots. Okay. Do's, guys. Look, pay all your bills on time. No missed direct debits. I think you're allowed 3 with each lender per year. Do you know what I mean? Make sure you have enough money in the account for the direct debits. Set a budget. This will enable you to save. Stick to your budget. Save a regular amount each month. Try and pick a figure and put that away. If you have extra, let it build up or put it in another account, but stick to the regular amount that you are saving. Reduce your credit cards, guys, or overdrafts. Who needs a 15 grand credit card and a 10 grand overdraft? What do these people, what do they buy? You don't need that. Reduce it, reduce the limit, get a limit which is comfortable with yourself and stick to it, because we have to count that as a full commitment.
So the lender, if they see the 15 grand credit card, they're
What's stopping you drawing down your mortgage and the next day going out and taking out 15 grand?
Yeah.
That's
Right, okay.
the way the lender will look at it. I'm actually going to put a please in front of all of these, okay? So please don't dip into your savings. There's absolutely no point in saving a grand a month and then going down to the credit union, taking 800 of it out the next day. There's absolutely no point. Please do not get new credit, like a car loan or massive credit cards. I don't want to be the one that have to tell you to bring the new Ferrari back. I don't want to be that person, but I'll have to. Please do not change jobs, if possible. I know in the healthcare profession, you might be contracted to certain hospitals, and that is okay. But don't decide during an application, do you know what, I fancy becoming a pilot or a fisherman. Like, we'll have to wait for your probation to be finished. Simple as. And you could be putting your case off 6 months or a year.
right. Okay.
Most importantly, don't allow gambling to show on your account or massive amounts. If you're betting on Cheltenham, take 200 quid out and walk down to the bookies. Small and within your limits is fine. And remember, we need your Revolut and N26 statements. So there's no hiding it. We'll find it and we'll get it.
Okay. Okay. On that note. Okay, so brilliant. Look, I think they're very good tips. So thanks for those, guys. Brilliant. So we've just a few more slides. Got a testimonial.
Yeah. This is a sneaky slide. I'm only after putting this in. Shauna doesn't even know about this. It's actually a recent testimonial for Shauna. Okay. As customers of IPF, for the last few years, we've continued to return to them for our financial requirements and needs. This is largely based on the excellent products offering, professional staff, and bespoke service. We have worked with Shauna on a number of occasions and have continually sought her out and returned with new business or a general inquiry. Shauna makes the process seamless, whatever they ask. We could not recommend IPF and Shauna highly enough. That's from Andrew and Deirdre. Now, guys, she did write that herself, so take that at face value. On that.
Oh, look, I'm not surprised to hear that at all. Well done.
Thanks, Ross.
No problem. Look, I'll pass you back to Clara on what happens next. So, look.
Yeah. So what's going to happen next for all the attendees here that are going, right, yeah, I want to have a conversation.
Yeah, so next steps is, look, we'll send out our pre-appointment questionnaire to everyone. So there will be one for everyone in the audience. We can then schedule our one-to-one, which will allow us to go into more detail and it'll be structured for you. Okay, so if you are self-billed or you're doing a single application or whatever, we will go through all of that detail in a phone call or a Zoom. Okay.
Brilliant. Okay, so before we go on to our Q&A, are we going to do our question to see where the attendees listening?
Please.
Yes, absolutely. Yeah. I've just opened up the chat function there. So if you just
So
click
the
on the
first
chat
person with the
function-
right answer.
Yes, absolutely. We'll be keeping an eye here.
Quick
what
answers in
percentage-
there.
Oh,
Oh, God.
some fastest finger first here. Yeah.
Okay, so what percentage of cashback is currently available with permanent TSB? So
Dun, dun, dun.
We reveal the answer.
Go for it.
the answer is 2%. So
2%.
Sarah, you're
Very good. We have a few correct answers there, but I think the first one is from Lorna. So well done, Lorna. And we'll get in touch with you tomorrow and we'll make sure and get your prize out to you. So well done for that.
very good. Great. Okay. Well, look, I think it's been really informative. We've gone a little bit over the 40 minutes, but I think, look, we'll open up the Q&A. We'll take a couple of Q&A for people who are on the call. And then we'll maybe close it off in like 5 minutes. And if we don't get to you, we will be on from tomorrow.
Absolutely, yeah. So if anyone wants to throw in a question there into the chat function, and I'll just pick out a few of the more common ones and we'll ask the guys to answer them for us. I think some people are still chancing the question there.
Yeah,
They're still
there's only one for all. was only
Is there one for all for everyone in the audience? No?
I'm afraid not this time, no. No, okay. So a
Okay.
couple coming in here now. So, Shauna, you might answer this one for us. So how long does an approval in principle last for? How long is it valid for?
Okay, so it's valid for 6 months, but remember, we can extend it. So if you're in the business of house hunting and you don't have it within the 6 months, we can extend it. We'll just need your pay slips and your bank statements. So make sure, even if you are house hunting, you keep the accounts in order. Doesn't mean you have approval in principle and then we can go start spending and tapping away. Let's keep the accounts in order, because we'll still need copies of them for the extension of the approval in principle.
Perfect, that's great. So we have a question then, if you're buying an older or a derelict house, is that treated the same as a self-build?
Yes, look, one of the first stage payments there would be to knock down the derelict house or an old house, or if it can actually be restored. It would really depend on the architect, engineer and the valuer on that. But yes, you can do that. It would be treated as a self-build.
Okay, perfect.
I think I seen one there on the Help to Buy. I think that's a big one as well. Look, the Help to Buy is a must, guys, if you're thinking of buying or if you're thinking of building. Okay, first time buyers only, and the loan to value must be at least 70%. Help to Buy is actually capped at €30,000. Okay, it's based on the amount of income tax and dirt that you've paid over the last 4 years. Okay, before applying. So if you're thinking about buying a new house or building and you're a first time buyer, you apply for the Help to Buy on the revenue. They have loads of information on there as well. Very easy to apply. And look, if you're building or buying a new house, it's a must. It's €30,000. You know, it definitely helps you. It helps you with the deposit, and you can actually reduce the loan a little bit if you do have a deposit saved up as well.
Okay, brilliant. There was just another one just around the whole protection side of things. So if you do have a health condition, but you already have life cover in place, could that be used as your mortgage protection?
Well, I think like it can be transferred across, provided it's either the same or less. Isn't that right, Ross? Like you can use
it has to be the same amount term, and you have to have the amount covered on the loan as well. Okay, so
it couldn't be more like a longer term or more money, basically.
Okay.
Yeah, that it's a complicated one as well. So it's really a discussion with the lender and ourselves to see if there is other aspects of it, like debt and service and a few other bits as well. So it would definitely be a conversation to have with the lender.
Okay, perfect. That makes sense. Okay, just
and in fairness, like I think it's great. It just shows it's been great interaction from the attendees, because we've actually loads of questions. So
we
take
do.
more, but we will be on to people and we'll answer all the questions. So don't worry if we don't get to you this evening.
I'll just pick one or two more out here, and then like
go ahead.
we can.
Good questions.
Perfect. Someone just asked, can we start the application process during their probationary period?
Yes, you can. So look, if you have a probational period of 6 months, you can actually start to apply at 4. You know, but you won't be able to draw down until after 6. But if you have a year, you're looking at probably 9 months. We'd look to get the application in order. But it would really depend on what your previous role is, because if your previous job was something similar to the role that you're in now, most lenders, depending on the role, will waive the probation period for you. Okay. So it's definitely I wouldn't do the application straight away. If that is the case, that person, look, contact me and I can actually go to the lender with your situation and see if it's worthwhile doing it now, or do we need to wait? I wouldn't waste your time on it. So I definitely go to the lender and see if it's worth doing.
Great.
Brilliant. I'll go just one more. Is there an option to pay a mortgage fortnightly and what in line with pay?
Good question. The lenders that we're dealing with, it's not. Unfortunately, it's monthly. Okay, so that is the only option for us at the moment.
Perfect. Okay, there is plenty of more questions, but I think if we get our email out tomorrow, we'll be able to come back to you all then, one by one. If you come back to us with the form, and we'll make sure we get back to all the questions we have. Is that okay?
Yeah. The call, guys, the appointment really only lasts 15 to 30 minutes anyway initially, and then we can go into more detail on a second call, or we can just set up the application there then. It is a very quick process.
And it can all be done online too, Ross, can't it?
Everything is done. So initially we'll have a call or a Zoom, and then what we do is we send you a link which will prompt you to go onto our online portal where you input your own personal details, and then that will prompt you to actually upload the required documents. We'll be in constant touch because you'll have our mobile number and email anyway. So the process is it's very easy and straightforward.
Brilliant.
That's brilliant. Well, look, thanks a million. So thanks, Sarah, for organising it.
Thanks
Ross,
to all the
Sean.
speakers as well. That was great. I
Yeah,
know.
no, it's been
Yeah,
it's
Karen,
really-
I think we're kind of veterans at this stage, but I know Sean and Ross is their first time joining us, so well done, guys. It's great.
Thanks, guys.
well done. And
Guys.
thanks a million. Have a nice evening, everybody.
Thanks, everyone. Bye-bye.
Bye.
Bye.